Hey guys, what is going on? Welcome back to the portfolio. Again, I want to start off the video by saying thank you to all the subscribers, all the viewers on the channel. Immensely appreciate the support. Special thanks to all the viewers with all the great video content ideas, all of the suggested videos on the portfolio. Definitely appreciate that. Again, if you guys have any questions on this video, other videos, any particular topic you want seen posted on the channel, please let me know in the comment threads down below and I'll do my best to get out a video or comment for you guys. And if you are new to the channel, feel free to like, share, and subscribe. And if you are subscribing, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. For today's video, this is actually a video that was suggested by a number of viewers, and that is a very large pullback in the price of KHC Kraft Foods. Very large pullback, over 26%. So you can see here on the 21st, on Thursday, trading over $48, and then on Friday, dropping straight down under $35, representing a pullback of 27% for Kraft Foods. This is all in response to its earning calls on the 21st in after hours trading. It had a number of negatives that were discussed in that earnings call, including its dividend being cut by almost 36% from $2.50 per share per year to $1.60 per share per year. It also missed on earnings and revenue by quite a large margin. It also disclosed that it is possibly being investigated, or it is being investigated by the SEC for its accounting practices. And there was a very large write-down on assets, $15.4 billion. So it had a lot of negatives, but this may be an opportunity to jump into the stock. That's what essentially the question was. Is it time to jump into Kraft Foods, or would you stay away from Kraft Foods at this point? It should be noted that Warren Buffett has a very large proportion of this company in his portfolio. I think Warren Buffett owns about 8% of the overall company. On Friday, his portfolio lost in excess of $4 billion because of the amount of exposure to this company. He's a buy and hold investor. Is this a good buy and hold stock? Is there any opportunity to jump in for a short-term swing trade? We'll kind of talk about that on today's video. Let's first go down to the bottom and talk about the large write-off in assets. This company was a merger, an acquisition by two different companies here, Kraft Foods and the Heinz company. As you can see on the bottom, this company was founded on July 2nd, 2015. With that large acquisition, there's a lot of goodwill that was associated with this transaction. And these terms get a little bit complex: write down, goodwill, write-offs. But essentially, goodwill is an accounting term. In accounting, it is an intangible asset. Essentially, it's not something that is part of the company, but is attributed to the company for creating value that arises when a buyer acquires an existing business. So the merger between Kraft and Heinz, the goodwill amounts to the excess of the purchase consideration, essentially the excess that was given to the company when it did acquire the company. Typically, companies will pay in excess of the current stock price when this is formed. Again, the money paid to purchase the asset or business over the total value of the assets and liabilities. So that is the goodwill in accounting. On every quarter or every so often, the company will have to reevaluate to see if that is added value to the company's balance sheet, to record the premium paid for the acquisition, as I said, over its book value. A company will do this on a regular basis to review the value of this asset, and if it's forced to admit that the possibility that the benefits of the acquisition may never be realized, accounting rules dictate that the goodwill asset has to be written down. And that's what happened with Kraft Foods and the Heinz merger. Essentially, it is decreasing the value of the company, the book value of the company. The market value will go down. You can see here currently it's $42.60 billion. This is reflecting the price of the stock, but book value is what the underlying company is worth, all the assets in that company. So the value or the shareholder value has dropped tremendously, $15.4 billion. So that accounts for a lot of the price of the stock decreasing. But also, and the more important part, I believe, is that the outlook for the company is very bleak. It missed earnings and revenue, and it doesn't look like there's any plan in place to turn that around. The dividend was cut, but that's not necessarily a bad thing. If dividends are too high, there's lots of investors who will avoid that company. That the company can support that dividend over the longer term, so the $2.50 to $1.60 dividend cut is rather large, but the company is still going to have a dividend over 4%. The statistics in the middle here are outdated. The company dropped by 27%. The dividend was cut by 36%, but because the stock price dropped so much, the dividend is still maintained above 4.4% or so, which is very good for dividend investors. This is also, like I said, a very good buy and hold stock, or it was a blue chip company that Warren Buffett holds. So if the company can turn around its business, I think this is a very good buy and hold stock, but I don't think I would jump into the stock at this point. I think there's too much uncertainty. The price of the stock has been changing too much, at least from my perspective, jumping into the stock. Take a look at some of the longer term graphs here. You can see it was already trending down for the past 1 year and over the past 5 years as well, since the merger back in 2015 here. Did bump up a bit here, then has been dropping very steadily since that time. I don't think this is currently a good contrarian investment to jump into, and maybe in the future, but I definitely would watch and see over the next couple of weeks of trading, maybe even month, where the price of the stock goes. If it starts trending up, maybe a good time to jump into the stock. This would be a very long-term buy and hold stock. I don't think you'd realize any return on investment for 2, 3, 5+ years. Again, I don't hate the stock. I don't think it's a bad stock to jump into, but I think right now there's too much uncertainty about where the stock is going here in the shorter term with regards to its earnings and revenue. So those are my thoughts on Kraft Foods. I definitely like to jump into contrarian investments, as you guys know, on my portfolio. Ford, the largest holding in the portfolio, is definitely a contrarian investment. Very, very high risk, but I think also high reward if the stock does turn around its stock price, which I think it does. I think it will in the future, but that may take a number of years. So in the meantime, I'm happy to pick up the dividend. Kraft Foods may be in a similar position. It's got a great dividend. It cut its dividend, so that cut dividend is going to be supported, I think, now for the longer term. I think it's a dividend level where it can be supported for the near term. But again, there's a lot of uncertainty right now. I probably would avoid Kraft Foods for now, but over the next 1 year or so, if it does maintain its stock price, I think it would be a good stock to jump into. But again, always want to know what you guys think about these types of trades. KHC, is it a stock that you are potentially jumping into as a dividend investor? Maybe a short-term trade, getting into the stock early on Monday, waiting for it to trend up a bit, maybe a couple percent, then selling off, or maybe jumping in and then holding it for the longer term. If you are going to do that later, I probably would wait a couple weeks before jumping into the stock to kind of see where the price of the stock stabilizes, and then jumping in at that point, knowing that you may have to hold the stock for a number of years before getting out of the stock. But it's got a great dividend yield that can support that over the longer term. You collect that dividend while you wait to get out of the price of the stock at a much higher point. But either way, let me know. Again, this was a viewer suggested video, so thank you guys for that topic. I may be taking a look at Kraft Foods. I have a small position here, 15 shares, $525.75 currently. With that large pullback in the price of the stock, I'm now currently down 40%. So not a great overall rate of return, but I think maybe an opportunity at some point, not right now, but maybe in a few weeks, maybe in a few months, jumping into the stock as a contrarian investment. But either way, let me know. Again, if you guys think this is a great stock pick, let me know. If there's a better stock pick in this particular category, let me know. I know this particular market segment as a whole has been struggling over the last couple of years. Maybe a good opportunity to jump in. But again, let me know your thoughts. And not to make the video too long, I'll kind of end it here. Again, if you guys have any great video content ideas, please let me know. Always looking for new ideas for the video series. And if you guys do enjoy the content on the channel, if you guys do enjoy the video series, feel free to like, share, and subscribe. Until next video, we'll see you then.